Hey guys, and welcome back to my channel. In today's video, we're going to talk about the big news, the Bank of Canada increasing interest rates by 100 basis points yesterday. We'll also do, as per usual, a very quick market update as well. If you're new to my channel, my name is Hasan. I'm a real estate agent in Vancouver. I make these educational videos to help you in your buying or selling journey. I don't want to waste any time. Let's get started. So unless you're living under a rock, I'm certain you've heard about the Bank of Canada's announcement to increase interest rates by 100 basis points yesterday. Now, the reason that there is a bit of a shock factor or a surprise factor with this news is most economists were expecting a raise of 0.75%. Instead, we had a full percentage point raise yesterday, which was the first time we've seen a raise of that magnitude since 1998. So what triggered this rate? What caused this to happen? And obviously the big dilemma that we've been facing here, not just locally here, but in the US and other parts of the world, is inflation. Inflation that is, running away from us from a control perspective. The US the other day, they announced that inflation is now at 9.1%, which is exceedingly high. The last number I saw for Canada was about 7%. So this is a number that the Bank of Canada obviously dislikes because their target for inflation is 2%. So when we look at interest rate raises, although this did cause some alarm in the market and for the overall economy, we do have to look at the bigger picture. Myself, I'm not super shocked that they went with a full percentage point raise. And the reason for that is, the bank needs to control this rate of inflation that they're already so far behind. So rather than chip away, we know that there's going to be another announcement in September where there's likely to be another raise. Rather than chip away at it and do a smaller raise right now, the bank, and in their own words, they decided to front load the path to higher interest rates, meaning that they wanted to be a bit more aggressive up front. And hopefully that means that there won't be as significant of interest rate raises moving forward. On that note, what's the end game? What's the end goal? Where are we going to end up? We have to keep in mind that, today the prime rate, the key rate for the Bank of Canada is at 2.5%, which is still historically very, very low. CIBC's chief economist is suggesting that they expect that key rate to level off at around 3%, but the fact that it was hiked more significantly yesterday increases the risk that this may land at 3.25%. So what this tells me is come September, we should expect another interest rate increase and likely next year as well, one or two increases before things level out. And again, we will be at a more normal key interest rate. Now, we as Canadians, I want to be careful how I word this. I don't want to say that, we've been spoiled with inexpensive money, because obviously we've been going through a pandemic, been challenging on a lot of people when it comes to jobs, mental health, a lot of different scenarios. But because of that, the economy was basically inflated, was flooded with more money, whether it was CERB payments, lower interest rate, making it almost free to borrow money. So, the government was concerned that spending would drop during COVID. So they flooded the economy, and now we're kind of seeing the repercussions of that. So this is a very normal situation for interest rates. I wouldn't be alarmed. Everything is cyclical. And again, I would expect that sometime next year we see things level off. And depending on where the economy is, we could see rates drop at that point as well. So what does this mean for you if you are a mortgage holder right now? If you have a fixed rate mortgage, it has no effect on you at the current time. If you're a variable holder, then you have to check and see what specific type of product you have. Some will have an adjustable payment. Some will have a fixed payment. If you have an adjustable payment, then yes, as the interest rate changes, your payment will change as well. It will increase. So you want to check with your mortgage broker and see exactly what that impact is. Your lender will, of course, inform you. They usually will mail out a letter saying this is what your new payment looks like. Now, if you are on a fixed payment variable, most likely this is not going to affect you at all, but what you do need to look out for is something that's called a trigger rate. And basically what a trigger rate means is if the interest rate hits a certain level, your payment will change. So you also do want to contact your mortgage broker or your bank and find out what that trigger rate is and how close you are to hitting it. Personally, on one of my mortgages, I have a adjustable payment, so that has increased over the last 6 months, and I expect it to increase again. Another one of my properties has a fixed payment, and I'm almost at the trigger point. So come September, I'm going to hit that trigger mark, and my payment is going to go up on that property as well. So yes, it's going to have some effect on us, but I believe that this effect is going to be more of a short to mid-term while we get inflation under control, and then again, I expect things to settle from that point. So what does this mean for the market? This is a great opportunity to talk about where the market has been over the last month or so and where we see it moving forward. Year over year, when we're looking at last month's numbers, both Metro Vancouver and Fraser Valley were down from a sales quantity perspective. Sales quantity down about 35% in Metro Vancouver, about 43% in the Fraser Valley. Prices down anywhere from 1.5% to about 3% month over month in both regions. The reason I'm giving you a month over month figure for pricing is if I tell you year over year numbers, we're going to be significantly up. So the story, we want to look kind of more on a short-term granular level. What's the price trend over the last month or so? And now we're starting to see those price declines in both areas. What's different between Metro Vancouver and the Fraser Valley is the state of supply. Supply year over year has actually decreased on average in Metro Vancouver, about 3%, and in Fraser Valley, supply has increased 18% year over year. So you're seeing significantly more opportunities, longer days on market in the Fraser Valley as well, more homes to choose from. So that's the main difference between the two markets right now. So what do I expect that this interest rate announcement is going to do for the market? If you're applying for a mortgage right now, and suppose you're applying for a variable rate mortgage, your buying power has just decreased by about 10%. So it's going to be trickier to get approved for a mortgage at a higher amount. You will probably get approved for a smaller amount of a mortgage. What do I expect that this is going to have on the market? So right now, July, August is an extremely slow period of time for real estate. I can't remember a summer where more people are focused on getting out of the city, traveling, waiting in passport lines all day, just trying to get out and travel again and return to a more normal life. So I expect July and August to be very slow, regardless real estate wise. So yes, buying power will decrease. I think this is going to create a bit more of a stalemate, a bit more of a wait and see from buyers. There's no rush. There's no urgency. From a selling standpoint, there's still a lot of sellers that are holding on to older prices, say from a few months ago. So it's just a stalemate between buyer and seller, which I don't see changing over the next couple months or so. So my next message is for buyers, and not just buyers, but anyone who's considering entering the real estate market over the next 12 months. My advice to you is to not rush into any decisions at this current time. We have another interest rate increase happening in September. I expect the market to be very slow, but what I would do with this time is two things. Number one, enjoy your summer. Number two, begin the education process. Learn everything you need to learn about home buying. And a good start, shameless plug, is to go through all of my videos. See if there's any questions that come up from the videos. Feel free to comment on them, or better yet, you can even shoot me a text or give me a call. I've had quite a number of you reach out to me, and of course I've worked with some of you as well, but I'm always happy to help. I want to make sure that when you are ready to go, when you're ready to take that step, that you already have the education, because if you educate yourself while you start the buying process, you often miss out on your first or second choice of property because you weren't quite prepared for what it was going to take to win that property. So now's the time. The sun's finally coming out again. Enjoy your summer. Ask questions, watch the videos, educate yourself. Let me know how I can help you as well. So guys, I hope you learned something from this video. If you did, I'd love it if you could hit the like button and consider subscribing to the channel. What that does is it sends the video out to more people so they can learn from it as well. If you're in the Vancouver or Fraser Valley area and you want to work with me or learn from me, all my contact info is in the description box below. Outside of that, thank you so much for watching. Have a wonderful day.